But I know a lot about FFIE. I've traded them for years. I know their backstory. I know their fundamental situation. The hardest part about trading squeezes is avoiding the squeeze. And if you can avoid the squeeze, that's like already a win. Now, did I avoid the squeeze? No, I did take a $15,000 loss on the way up, and it's still my best ticker of the year because I was able to make that money back times whatever, times maybe 3 or 4. What's up guys, my name is Mike Huddy here from the Clover Trading YouTube channel, and today we're gonna be talking about our biggest losses and our biggest wins from 2024. For me, I like to talk about the most impactful loss for 2024. A lot of my losses, they stay in the same range. I really try not to have these outsized losses within my data, but there are certain losses that I kind of remember more than the others, and there's some wins I remember more than the others, and that's what we're gonna talk about here today. What I have in front of me is a chart of AMC. It's probably a chart that most of you guys recognize, or at least a stock that most of you guys recognize, because AMC is a movie theater that probably a lot of you guys go to, and it's actually been one of the best tickers to trade in the market for the past 4 years. I mean, it has an immense amount of volatility, it's got great range, it really performs the patterns well, and today we're gonna be talking about why it's my worst loss of the year. So catch 22 there. I've had a lot of great trades on AMC throughout my career, but this one kind of got me. As you can see on the chart, we have this super extended situation where in 2 days it went from $3 to $12. And I'll kind of talk about what I was doing. It's not something that I normally do. I always say this in like the webinars and stuff. It's usually when you're outside of your comfort zone that bad things happen. You have like a rinse, wash, repeat process. Okay, great. And when you're outside of that process, that's when errors become magnified. And when you're in a situation where it's unfamiliar, panic can set in, and panic can lead you to make the wrong decision. When you start trading based off your emotions, that's where things can get kind of haywire. So this is the long-term chart of AMC. AMC is like this horribly dilutive company on the verge of bankruptcy. Who knows if they'll actually go bankruptcy or not, but you can see back in the chart is it's had some amazing runs. This is back in 2020 when it went from a low, it's done some splits and stuff like that, but it was a low of $19 for this chart adjusted, and went to as high as 726 in just 6 or 7 months. Like an insane run, and look at the speed of which it was able to do. Fast forward, 4 years later, we're talking about this little dot on the chart since it's, downtrended so much, but it had another similar move just like that one prior in 2020. So why is this one of my biggest losses of the year? Well, I was doing something a little unique with it. Again, I mentioned that AMC is this horribly dilutive ticker. So I kind of had it in my mind that this is gonna pretty much fade into oblivion, that they're eventually gonna go bankrupt, that they're gonna do tons of offerings to finance their business operations. And so I had this long-term thesis of pretty much shorting it into the ground. And that's not normally what I do. I don't like to have, shorts overnight. I don't like to continually short something over and over and over. I like to day trade. And generally I don't want overnight risk because I really can't predict what's gonna happen in the market. And that's really important. Like, there are risks that you don't know exist when you're getting into any ticker. So with AMC, that's exactly what happened. So I started shorting it maybe in March in the 5s and 4s, and I kept adding to my position all the way into the 3s and the 2s, where I ended up with some type of 3 average. And then what happens? An unpredictable event happens. Roaring Kitty comes out of the depths of wherever he crawled into, comes out and says, hey guys, like, I'm buying GME again, right? And what does that do? It sends GameStop, right, to the moon, so to speak. It went from like $17 to 60 in 2 days. Now that's important because what runs with GameStop? If you're a seasoned day trader, then you know this. GameStop and AMC, they ran together. They were like sisters, right? If one was up, the other one was up. And so they have this like certain nature to them where it's like traders want to attack these stocks when they're volatile. If they see a lot of GME and GME is like volatile and it's moving well and there's a good catalyst behind it, they're gonna go look at AMC as well because they know there's a small correlation between the two tickers. So that was the issue, right? I really couldn't predict that Roaring Kitty was gonna tweet for the first time in 4 years that he's long GME. And what's that gonna do to AMC? It's gonna create this short-term volatility event. Now, long-term, it's not really gonna mean anything for the company because nothing's changing, not only with GME, but also AMC. It's just one guy buying a ticker. But it creates demand, and demand creates price movement. So we do get this amazing run on AMC, $3 to 12. I didn't have the biggest size. A lot of my losses, like most of them are calculated. Like I really wasn't in an oversized position, but as it started to spike against me on this day one here from $3 to $6, I wasn't really willing to cut because my long-term plan was to keep shorting it. And I knew that if this gave me one of these types of moves, I would inevitably just be adding at the top of this move, averaging up to a much better average, and I would continue kind of shorting this into the ground, kind of like, the thereafter, after this spike, I would continue to short this, and I thought it would come back down. And where was the mistake, right? Like all that's part of my plan. The sizing was fine. Even the loss at the end of the day, we'll get to the numbers, but where was the mistake? Again, I'm in a situation that I'm not normally in. This stock is squeezing, and because I have this long-term swing plan, I'm not managing the risk. I'm not cutting the loss. All I'm thinking about is, what is this gonna look like 2 or 3 days from now when I have to add at higher prices? So all of that was fine until I realized what the higher price was. So we closed at 5, and the next day it gapped to 12. So another 100% higher, roughly. It wasn't the biggest loss at the top, because again, I'm in from 3, so I'm down almost 200% on my position. I think I was down like maybe $9,000. Like we're not talking about a huge loss. But what did I do that morning? I ended up in the pre-market covering the position because I lost sight of the plan. I started to panic. I said, how high is this thing gonna go? And the reason it was the loss that I don't like, again, it's not the dollar amount. It's the fact that, what was my plan? My plan was to still short it on this day, and that's exactly what I did. So I made back a portion of that loss on this big ugly red candle because I ended up short in the 11s or 12s. And that's why I think covering the loss was really stupid, because I covered it, and then 3 hours later, I was pretty much shorting where I covered. I really didn't have to take the loss, but I ended up panicking out, and I ruined my plan, and at the end of the day, there didn't really have to be a loss here. I could have really held the position, added or initiated a new position because the strategy had changed. This is no longer just a swing trade. This is a day trade. Like I love this type of volatility, overextended gapping crap. One of my patterns that's bread and butter. So I ended up just taking a normal day trade on this and riding this all the way back down to the 5, 6, or 7s. And just in my mind, just taking the loss in the beginning was a purely emotional play. And that's why it really sticks out to me, right? Overall, didn't like my whole plan of just swinging and shorting this to the ground. So learned a couple good lessons from here. Mainly that, we had this huge volatility event and I wasn't able to capitalize massively because I had to take a loss on something that was completely not related. And then I had to make the money back. And so that just feels like wasted opportunity. And it bothered me. It bothered me for quite some time. Today, I'm no longer touching AMC. I'm just not really doing that stuff anymore. But this will always be something that I want to make money on when it appears, this very specific daily chart. So missed opportunity there. That's a pretty big one in 2024. And then we'll go into my best trade now. And it's really just my best ticker. And I'll tell you guys why it's my best ticker. We're gonna talk about FFIE because it actually provided some really historical opportunity. This is the penny stocking framework. This is the best of the best in my opinion. When you really see true volatility in penny stocks, these are the types of moves I want. These are what I want the charts to look like. Like what we have in front of us right now is not a chart that you're gonna see every day. It should look very unique. Like these are not what charts look like. We have a situation where a stock went from a low of pretty much 4 cents. They did a reverse split, so the numbers are different now, but it went from a low of 4 cents to $4. And now on this chart, it's gonna say different numbers because again, they did a reverse split, but this candle low here is about $4 and it went all the way up to 155. And look, it's 4 trading days. That's an immense amount of volatility. It has an immense amount of volume. It's tradable. It's not some like illiquid, weird thing in the market. And when stocks go through this type of volatility, it presents a lot of opportunity because gravity eventually takes effect. What goes up should come down at least, doesn't have to. But I know a lot about FFIE. I've traded them for years. I know their backstory. I know their fundamental situation. The hardest part about trading squeezes is avoiding the squeeze. And if you can avoid the squeeze, that's like already a win. And then capitalizing on that gravity aspect thereafter can be the double win. Now, did I avoid the squeeze? No, I did take a $15,000 loss on the way up, and it's still my best ticker of the year because I was able to make that money back times whatever, times maybe 3 or 4, as this thing continues to downtrend and present other opportunities. It's just an amalgamation of a number of different independent opportunities that are really adding up as this thing is still volatile. Because if we're looking at this chart, these candles, we're just gonna use the prices on the screen. I'm not gonna adjust them in my head, so it just makes sense for you guys. 155 down to 36 in one day. And I was shorting this ticker that whole day. And then the next day when it gaps up 100% on this red candle here, I'm still shorting this as like a first red day. On the second day that it's gapping down, I'm still shorting this like an overextended gap down. I'm still playing this pattern for multiple days. So maybe we can count them, maybe we can't, but I definitely, again, I took a little bit of a loss on the way up. And then by the time these 2 candles had transpired, I had made back my loss. And then it was from there, just gravy, gravy, gravy. On this day I was short, it kind of went green for a second, it reversed its trend. So I did cover for the time being, but I knew there was earnings coming. I knew that they had postponed their earnings for years. I know why they're postponing their earnings, because they're broke, because they have a ton of dilution. It's not gonna look good. The next trade I had on it was kind of shorting before the earnings for this breakdown of the dollar area. Got short on this day right here and covered up into this next day wash. So again, continually just coming back to this ticker because I know there's so much range. I know it's up from, again, the low here is $3 and the high is $155. So even if I'm still shorting it in the 30s, 40s, like it's up from $2 or $3 and it's a horrible company. So yes, there's always risk that I can get squeezed, but this is just one of those opportunities where I just felt like you could trade this thing for a long time and it's going to go through the patterns because this is trading like a penny stock. A lot of times you're gonna see stocks that just kind of go up for a day and then back down and you're gonna forget about them. But it's these types of tickers you don't forget about because there's always this continuous presence of opportunity. I mean, even looking at this price action down the line here, there's plenty of multi-day runs that lead to fade, and there's opportunity on both the long side and the short side. For me personally, I veer towards the short side with FFIE because I think it's fundamentally flawed and I understand the price action of this ticker and where it's going. Like big picture, what do I think this ticker really is? That doesn't mean you can't make money on the long side. I mean, in a situation where I'm not the only short seller out there that knows this company what it really is. And when you have too many shorts on the same side of the trade, you're gonna have squeezes, you're gonna have momentum. Now, we can see that ever since this kind of blow off supernova move, the moves have become less and less and less. I mean, we have these multi-day runs, but they're nowhere near what they once were. And that's kind of the fate of these tickers. Once they go absolutely parabolic, they ink some dilution, and it becomes this bouncy ball thing where it has, small little pockets of opportunity that create uptrends, and then they go back to fading. This has just been one of those darlings of the years. Tons of opportunity here. Probably my favorite ticker of the year because I really haven't seen too many multi-day charts like this. This was a lot more common in 20 and 2021. Pretty standard in normal markets like 2024 to see maybe 5 or 10 of these per year, all different shapes and sizes, but these massive like 600, 1,000% runners in just a multiple of days with liquidity. So really awesome to see, and there's just so much to learn and unpack from these types of charts. I love them. I love teaching about them. I love talking about them because, again, there's so many lessons baked into what is merely a candlestick to maybe you guys is a whole narration and a story to me, and it's about uncovering that story and truly understanding it so that when something similar happens again, we have some type of precedence to apply to the situation. Hopefully more FFIEs in the future. Hopefully if you are short biased, you're avoiding the squeeze, you're not blowing up on the way up so that you have, the tenacity to capitalize on the way down. If you're long biased, I hope you nail the squeezes. I hope everyone wins types of thing. Like the more that longs win, the more that I can win. If the stock goes up, then I'll have a better short, right? So I'm here for the people. I'm here for everyone. I hope everyone does well. And those are my 2 trades of the year that I will remember going into next year. That's it from me, guys. Make sure that you hit the like and the subscribe button. Remember, this is the Clover Trading YouTube channel. We release videos every Monday, just like this one. So you want to make sure that you ring that bell. Make sure that you are notified when the next video comes out. Have a great rest of the year, guys, and we'll see you guys for the next video.